Okay, good morning and welcome everyone to this live intraday strategy session on SB Trade Desk. Mike Boutros here, currency strategist with you guys. Good morning. Eileen, Permendra, Tiffany, Roy, Pooja, the whole crew's here. Chris, great to see you. Dale, always a pleasure. Tom, Tuttle, Alex, Aurelian, been a while. Brian, great to see you guys. So we'll jump right into the charts. For as far as data is concerned, guys, we're not too heavy on data today. We're looking at wholesale inventories from the United States around 10 o'clock. It shouldn't be a major market mover. As we get into tomorrow is when the fun stuff starts. So you have the Aussie employment data that comes out tomorrow. You have CPI data out of Germany, retail sales data out of the United States the following day on Thursday. So there is some event risk on tap. Obviously, Thursday we'll also get the BOE inflation report. So for the sterling scalp we've been following, that should also have an impact. Let's jump right into the charts here, guys. As always, feel free to throw out any questions, trade setups you guys are looking at. Be more than happy to review those. We'll also take a quick segue and jump and see what the swing side of the trades are doing. I happen to like both of those setups that we're currently in very much, the Aussie dollar and dollar yen that were published last night. So first things first, I mean, we're right here on the dollar yen, so we might as well talk about it. Just wanted to note one thing, guys. This move that we're seeing here with this break does a couple of things. So if we take this back to the daily chart real quick, you can see that we're challenging that trendline resistance, okay, dating back to the yearly highs. Actually, that's from December high. And on this stretch, on the daily chart, I don't really have anything until 120.17. Now, 190.80, I'll show you in the near term, it actually is a really nice retracement off the high and a near-term target. But on the broader scale, you have some room to the upside here if this holds and closes above this region. Remember, as we started the week, this was the issue, right? Friday's rally really failed to give us a conviction close through this region. Yesterday got a quick pullback, and here we are moving higher. If this closes above 118.90, specifically 119, we'll call that a break. Dollar yen on the intraday also invalidates the weekly opening range with this move. Okay, so objectively speaking, above the highs here, 119.18, 119.20, basically where we opened Sunday, you want to stay constructive. Topside targets near term, 119.75 into 119.87. And I think this is the exact region that Jamie's looking at as far as the swing trade. So pretty good here. Again, as long as you stay above the median line, aka 119.20, I'd still favor the long side here. If you see a 70 break in momentum, you see a reversal back below that, you're likely to find support back here at 118.80. But as it stands, those are the current operative levels we're working with on the dollar yen. Any questions on the yen? And again, as far as event risk is concerned, for the U.S., really, you don't have really much on tap until you get to retail sales later in the week. All right, so we'll stay constructive above 118.90 and a break below the median line. Essentially looks for a resolution lower below the median, the opening range low for the week. But as it stands, that's sort of the game plan here for dollar yen. Moving right along to the scalps that we've been following. So unfortunately, the sterling is still a wait and see, guys. Here's what the sterling setup looked like from yesterday's update. It's pretty clear. We have a very clear and well-defined opening range right here, low stretching into 52, the high stretching into the resistance that we noted on Sunday at 152.65 into 152.70. And that's still the range in play. Now, you can feel free to play inside the range, guys, but you want to shave off the ATR from the quarter because the whole range is basically consistent of double the ATR here that we're looking for. So you want to make sure that you're keeping that in mind. Here's what the British pound looks like. Well, firstly on the daily chart, right? The whole objective or the whole idea behind this week's scalp on the sterling is that this 53.20 level coincides with a lot of different technical features. You have the median line off the low. You have the trendline resistance off the high from July. You have the former trendline support off 2009 lows, which acted as resistance here, also in that region. And as we stretched into this, basically the risk is for a snapback and a breakback below. So we've been trying to trade against this region. At the end of the day, we're just waiting for a basic weekly opening range break. It can be frustrating sometimes when they stall like this, but I think it's a really well-defined opening range. I don't think anyone's going to argue that. From the weekly open, you have a very clear-cut, concisive range here. So inevitably, we'll get a resolution It's a wait and see. Again, like I said, if you feel like playing the inside of the range here, just choke it up. You had some really nice trigger targets on the 5-minute chart. Okay, you had a trigger right here off the break, which would have given you a nice long entry against that low. You had a trigger earlier in the week right here on the break that gave you a long position against these lows. But my point being, on the stretch, you're barely getting 30 pips. So a quarter of daily TR at 32 pips, trying to play the inside of the opening range here is kind of tight. Long story short, we're waiting for a break either sub 52, which is the favored move, or above 52.70 to give us a directional bias here for for sterling moving forward. Jay Jackson, when did we note entry on the yen? Didn't get the notice until tightening the stop. It was actually on the swing trade page yesterday. So, guys, we're not going to always be able to inform you. Obviously, if the trade triggers an overnight, we can't be awake 24 hours. So make sure that you're just keeping note of the swing reports that are published every day, guys. It was actually an entry right there on it for the dollar yen. Sterling yen also waving high, says Eileen. Let's take a quick segue what the sterling yen's doing. So obviously the sterling is still in the opening range, right? The yen is seeing some weakness versus the dollar. So we should be expecting sterling yen to be moving higher, and that's exactly what we're getting. So the premise of this trade, I remember we talked about this last week as well, is if this was a legitimate break that we made on Friday above that descending pitchfork off the highs from December, we should be looking for a stretch into 182.60 on initial target, 50% retracement of the range. But more importantly, this major key region of resistance. You have the R1 monthly pivot. You have a 618 retracement off the high. You have a 50%. This retracement dates way back to the decline off of the any minute now, off the highs that we made in 2007. Okay, so a long dated retracement. This is the daily chart for the sterling yen. And that brings into focus 84, 83.96, 84.20, Eileen, as a break target if we make it above this initial one at 82.60. But a really nice wide range scalp. I'm not sure why the HDR is not on here. Let's bring that in. $221 pips, so a quarter of the daily ATR should be somewhere in the range of 60 pips on this one. Let's see what the near-term chart looks like for sterling yen. Okay, I haven't updated this, Eileen, so give me one moment. Let me put this together right for you here on the sterling yen. We'll leave that stretch there, that 236. We have it at 84.20 on the daily chart, but because it caught that high there for November, I'd be pretty comfortable for the opening range there, leaving that region as a scalp target. Sterling yen broke its weekly opening range within the hour, says Jay Jackson. And you're absolutely right. Not only the weekly opening range, but I think, if I'm looking at this correctly, really clean break of the Asia-Pac opening, not the Asia-Pac, excuse me, the European opening range in and of itself. So here's the weekly open. You're absolutely right. Opening range high got set at 81.60. There's the break. You stay constructive about 81.60. The only thing that puts you on the bearish camp is a break of the lows. With the formation that we're in right now, I'd feel pretty comfortable calling that median line our near-term bullish invalidation level, as we've seen some very clean pivots off that. So I like it, Eileen. Thanks for bringing this up. I'd still be looking for that 82.30 region that we saw both on the daily and this intraday chart. I just want to see if there's an extension here that we can play with. Yeah, nothing I'd be interested in. Those are the near-term targets I'd be using for now. Again, quarterly daily TR is looking at about 56 pips on this one. Not a bad range. Okay, and we'll use this as our near-term support here. If we hold into the session opens for the U.S., you want to see this thing defend that 8160 region. Not bad. Not bad. So again, I can't do anything here because it'll be pure chasing. But on a pullback, I lean into this region. I mean, ideally, you get a pullback that surpasses this and gets another bounce off of this level, and you could take a long against the opening range low for Europe, which is essentially 180.55. So if I can't get deep enough of a pull here, Eileen, to get a stop against 180.55, I'm not really sure I'd be able to play this here today. That being said, the opening range break, if it holds here, is pretty clear. And once we close the U.S. session, we'll use that opening range low to try to defend a long position. But looks pretty good. Looks pretty good. Sterling yen on the daily again. Quick peek. Yeah, I'd be wanting to see if this thing can get up into this region right here. Also note a couple things. Okay, this is the first 50 break that you're seeing from sub 40 territory since here. You can see what that did on the rally. Prior to that, a 50 break to the upside, sub 40 territory. Well, this was a bounce off of 40. Still gave you a nice rally. Aside from that, from sub 40, it's been a while. It's been a while. And then this is another good indication, guys, when you look back at the broader trade, which is why, by the way, for anyone who's been reading on Daily FX, sterling yen has been my trade of the year for the last 2 years, in 2013 and 2014. I think when you look at this pair, the monetary policy divergence that you're seeing really affirms what we're seeing in the technicals. And I think on a pair like this, where both of the pictures of the fundamentals and the technicals come together, I think that's a very strong case. So I do think you broadly see sterling yen continue to be supportive throughout the year. Obviously, we took a pretty big spill towards the end of December and into the start of January trade. That being said, I just want to point out something about the momentum indicator, guys. Since the low that you made here in 2012, the last time we saw oversold territory, look what's been happening to the momentum profile. 40 bounce, 70 break, 40 bounce, 70 break. 50 bounce, 70 break, even stronger. 40 bounce, you hold there for a while, 40, 60, 40, 60, 70 failure, 40 hold. Now you dip into oversold territory. You test 60, you dip into oversold territory again. And that's why on this rebound, I'm really shy to get too excited about the upside, Eileen. I'm just trying to walk you through the rationale here. I think you play the upside into this region. I wouldn't get overzealous beyond this, not yet. Until we see the momentum get back above 60. Because this is a classical, I don't want to say topping in momentum, but a failure in momentum, especially when you get those drives into the oversold or sub 40, then you go right back above 60. Right back sub 40. If this holds at 60, it would be an indication that you still have one leg lower to go. So near term, yeah, 82.60, 82.30 on the scalp, 82.60 here on the daily. And then the key region just sub 84 is where I'd start to really pare back my expectations for further strength. Does that make sense, Eileen? Eileen says, thanks. I'm in the trade for a little while ago when I saw the weekly break. Right on, Eileen. Nice entry. How about the pullback on the top of the opening range with a momentum trigger long? Jay Jackson, I'd play that 9 times out of 10 as well. The only thing I would caution you on that is that markets don't work in a static vacuum. And this is something I've learned too, especially when you're working with real near-term price action like this. So I agree with you. If you get a pullback into the opening range high and a trigger break there, that'd be very appealing. The only thing I just want to note is those pullbacks to test the opening range, guys, can get kind of messy. They can probe deep into the weekly range before it breaks out. So I just want to caution you to leave yourself some room if that's the way you're going to play it. For me, this is sort of a sweet butter zone here, right around the 81 handle to take it against the lows for Europe to try to get that rally back to the upside. Looks pretty good, though. Here's a momentum trigger that takes you out of the longs if you're in them. So, Eileen, you're going to want to watch this. And actually, on the move, believe it or not, that was actually a pretty beautiful trigger break right there. Trigger break, especially when the triggers coincide with the 50 region, the 60 region, the 70 region. These can be pretty operative. Now this one stalled out for a while, but along here against the lows, you know, for the week, the opening range low would have been a perfect entry as well. So nice eye on this one. Jay says, okay, thanks. Eileen says, makes sense, I'll watch. Right on. All right. Tuttle, we'll definitely take a look at that in just a moment. I just want to get through the other scalp setup, which was Euro Oz. I think that one's going to pan out too in the coming hours or days here. And I'll continue to like this to watch this one. I like this one, Eileen. All right, so back to the intraday page. Again, guys, you can always click on the scale here to see the broader structures of what we're trading in. So that's there for your benefit. The Euro Oz. On this setup, obviously we had a little bit of took a stop on this one on the swing side of SB trades yesterday with the break back below 44.85. It's a little bit of a tricky play here, guys, but remember what we said on the note on Monday. You know, we were actually looking for a probe into 45. Now, it got much deeper than we expected, but look on the pullback. Momentum went sub 30, and that instant break above 30 coincided with a trigger, okay? And even during the webinar yesterday, for those of you who were in the Daily FX webinar, by the way, guys, Monday webinars are going to be on Daily FX. It's the one public webinar that we do for the broader public. So, you know, feel free to join us on there. It's open to all. We were talking about this setup just as this thing was rebounding off this region. And that trigger break looked pretty convincing. You attained more than double of what you'd be looking at per scalp, which is 58 pips. And it went right into the secondary target at 45.30. Now, this held. Last night we talked about a pullback from this region. You got that pullback. A nice long entry here would have gotten you right back into the 145.33 region. Here's what it looks like on the live charts. All right. So again, just put them side by side here to see how this panned out, right? This is where we were trading, 45.33. You got a pullback as momentum held that trigger. What happened? The pullback found support at 40. It's your first tell. The opening range low for the week is just lower, so you have a really nice stop to trade against. You're just looking for that topside trigger. Unfortunately, the topside trigger on the 30-minute didn't really pan out, right? You're getting this push higher here from this trendline resistance, and if it breaks, you'll be looking for a move into the opening range high for the week, but not a very convincing trigger there. On the 5-minute, we'll take a look in just a moment, and there's your trigger that will take you out of long exposure. I just want to see what this looks like on the 5-minute, guys. Okay, so this was the trigger that you would have wanted to use on the 5-minute. Okay. Trigger break here. Long against the lows. Stop down there. Looking for 59 pips, 55 pips on the stretch. You got well more than that at this point. All right, so the focus heading into the U.S. trade session, guys, is are we going to hold above 45.30? If we do, like I said, your objective range is the opening range high for the week. We're not looking for anything surpassing 46 just yet. On a break of the weekly opening range, we'll hold that topside bias. But remember, we came into the week looking for a low to buy. We got one on Monday. It's a very clear opening range trade, guys. So you're constructive within this range. You validate that bias with a break above 46. On the initial open, remember that we gapped higher, and I noted this in the report that we would need to move into 45 just to fill that gap. So we overshot it. Again, if I zoom this out for your consideration here, just a quick look. The parallel that we're working with, guys, for the Euro Oz, if you take a parallel off that slope and connect it to that swing low that we made there on the 28th, okay, give us a little padded region here of where we look to invalidate that topside bias near term. And you can see that all the lows have essentially been between these two median lines. So looking for a stretch higher into 146 here. The only thing, like I said, that would put us on the bearish camp would be a break below this region, in which case you're looking for 143.60, 143.80 here, and then right into the 143 handle to complete a 618 off the low. But the range in focus remains that Monday-Tuesday stretch. Questions on Euro Oz? Still liking it. Still liking it, and especially if we clear this godforsaken trend line with a 60 break in momentum. That would be the first 60 break we saw since last week. Obviously, that was data-driven, but nonetheless, we'd be looking for that stretch into the opening range high. Nice wide range scalp, guys. 60 pips, 55, 60 pips per scalp here should suffice. Last but not least, a quick gander at gold. It's something we've been following for the last couple of weeks. I think as you head into this week with where the dollar index is, we'll take a look at that in a moment, still holding that key resistance range. The focus on this, and I linked my piece from Daily FX, guys. There's a very similar setup on silver that we talked about in the webinar yesterday as well. Same exact formation. So off the November low, pitchfork support, essentially highlights 1220 to 1230 as a key support range. Another median line dating back to 2013 also comes in there. And the focus is that rebound going to give us legs to move higher, or this is the bullish invalidation level. So if we break below this, it's likely to be pretty ugly for gold. Personally, my humble expectation is I do think, you see some upside against this region. Here's what the dollar index looks like. That's still holding key resistance. And I know some of these major trades or bigger trades that we're looking at are really, really tight ranges right now. But that's why you want to focus on them now, okay? Because when those tight ranges break, for a scalper like us, that's our party. We're going to jump all over that. But for me, it's very hard to validate and get very aggressive on the scalps until we get the breaks of the opening ranges. Again, I told you this or yesterday in the webinar, the opening ranges for the dollar are of the cleanest, alongside gold and some of the other commodities that we track. So still at risk on the long side for the dollar index, sub 11,880. If you do see that break, there's tons of room to the upside. That being said, longs at risk below that region, which is why the gold trade becomes more in focus as you sit at support. So you can see a scenario where the dollar finally shows correction. You get a little bit of a rally here. Initial targets for a gold topside, guys, are only 1250 into 1253. You got the 200-day moving average, which has been a very nice pivot in price, as well as this 618 is not so important because of this extension, but because of the high day close for October. That's why I have that there. So this region right here is sort of what would put us back on the constructive near term for the week. Okay, so for those of you able to trade CFDs, I think you get a nice move here in gold upcoming. Also keep in mind, aside from the technical factors and the trend lines that we talked about below here, guys, you do have a basic 100% extension. So if this is the real deal ABC simple correction, you should be looking for that low there to be defended. Okay, any questions on gold? So those are the ones highlighted here on the scalp page. Again, the setups here, guys, as they come through the week. So as we come into more focus for more pairs, we'll add this up. There are some weeks where there are 8 or 9 scalps in play. So far for us, we're just really focused on the sterling and the euro Aus. I didn't want to be redundant. I see that the swing trades are also in the dollar yen and the Aussie. So both of those also look pretty good, especially on the Aussie pullback that you guys were trading on the swing side. Here's what the intraday chart looks like for the Aussie. I just wanted to point out real clean triggers here. Real clean triggers. So you had a nice divergence into the high, price action, higher high, which happened to come right into upper median line parallel, the momentum indicator, lower high, followed by trigger break. 9 times out of 10, I will take these positions. Just so happens this was 2:30 in the morning, so not something I was able to participate in, but a beautiful entry nonetheless. So again, on a trade like this, from a scalping standpoint, okay, swing trades, you guys are looking for a deep entry into 76.85. You want to watch that 77 handle first. For me, on an intraday basis, if you took that short with that trigger that I just pointed out, your focus is really on the opening range low for the week. Okay? Stefan says, when do you sleep? Not as much as I should, I'll tell you that much, Stefan. But I definitely wasn't up at 2 in the morning to get that position. But I want to say this. The opening range low for the week is what comes into focus, guys. It happens to be an exact 50 off the low. A break below that, you have a very clear-cut target. You're going to look for the median line parallel, okay? But also the key 618 is at 77.20. So just two levels I wanted to point out ahead of the the swing focus. Those are the levels I'd be looking at near term. Whoops, that's not what I wanted to do. Sort of this cozy region right here, running the 50 into that trend line or the median line parallel. That's with a break of the weekly opening range low. So if you're trading this from a scalp, that's your first target. If you're holding a great entry, don't necessarily need to get out, but this is where I'd be taking off a quarter of the trade, half of the trade, a third of the trade based on your risk tolerance, and definitely at that point you want to bring your stops to break even and see if you get the penetration through the opening range low. Very rarely, guys, just as a side note, from a scalp standpoint, very rarely do I target outside of the weekly opening range until it's broken. So this is just like the pound to me. Okay, we're waiting for that range. It's been set. I'm waiting for a break. I can play the inside, but my targets or my limits shouldn't be outside the weekly opening range until that breaks. And like I said, if you want to try to front run the break, that's fine. But as you come into this region, your stops need to be broken in at or come in at break even, and you need to be booking a small portion of that trade, whatever's you're comfortable with from a risk tolerance standpoint. Does that make sense, guys? So some food for thought there ahead of the break of the weekly opening range for the Aussie. Again, as you head into Thursday, you do have Aussie employment data, usually a nice mover on the Aussie for that release. So keep that in mind for those of you who are on that position. All right. Brian says, like it. Thanks. You're right on, Brian. Cheers, mate. Okay. And one other thing I just want to do, guys, before we leave the Aussie here, the daily chart. I haven't showed you that. That's not it. There we go. Okay. So 72.24, or 78.25, excuse me, 78.24. It's a 2618 off the decline off the October high, but I'm not really stressed of it because of that region. More so just the opening range high for the month, right, for the week. And this is the tightest opening range you'll see. And when they stay this tight, the break will move. This is the last time we saw a drifter. It was all through July and August. It was horrible trading conditions. You never got a real solidified break of the opening range. But when that 2-month range broke, the subsequent pullback here was pretty huge. You got another month of consolidation. And I'm not saying that this is what I expect the entire month, but the longer that we stay, the more efficacy the break will give you. So keep this daily chart in focus here. Again, we're below that median line still, so the broader trend still remains weighted to the downside. Momentum signature is extremely bearish. The only thing I do want to point out is the divergence that you're putting into the lows here. But again, these divergence signals sub 30, not the most important ones. So hopefully we can get that moving on that front. All right, let me jump into your questions here. Again, feel free to throw out any pairs that you guys are looking at and take them in the order that they came. Sterling CAD here for Tuttle says bull pennant for the first week of February. Time for a big wave 5. Let's take a look at Sterling CAD. We were following that on the scalps a couple weeks back. Let's take a gander at what this thing's doing. Could be pennant, could be some sort of triangle formation as we consolidate near the highs here. Remember that the 190, 150, 192 region is where we left off with this one. I see what you're looking at. I see what you're looking at. There's a couple of different ways you can interpret this. You know, this in and of itself, just the rally off the 2015 high, looks like a clean 5 wave to me. 1, 2, 3, 4, 5. 3 being the largest extended middle wave. So in fact, the fact that we came into a major key resistance here, consolidation, could see this Tuttle actually break down before you start to move higher. Now, I don't like where this is right now. I'm just going to say that to you right now, just because for a couple of different things. A, you're right slap in the middle of the monthly range, right? Your monthly range high comes in at 92.50. Your monthly range low comes in at 87.70. So it's a huge range, and you're right slap in the middle. So I don't really have a clear-cut, decisive bias from here. Secondly, let me just confirm this before I say it on the intraday chart. Sterling CAD. Right, that's what I thought. So secondly, the momentum signature, rather, on the daily chart, which is right slap in the middle, not really giving us much conviction, right? Just drifting above 60, so it's still constructive. You haven't gotten the 60 break, but it's right there, kind of flat. On the intraday chart, which I keep losing, it still doesn't look like it's corrected higher. Does that 618 catch the low? Yes, it does. Okay, we'll get rid of this. Opening range high for the week. Whoops. $60 pip ATR, nice healthy range. Yeah, it could be something. It could be something. Let me just take one more extension real quick. Sorry guys about the delay here. I'm just going off the cuff. I just want to see if we've achieved anything significant on the stretch here. Just missed 100. Okay. Key support and the opening range low for the week. And what is this 1618? Oh, that's the daily chart. Okay, so here's how I'd play this one, Tuttle. And again, this is just my take on what's going on here. So obviously, it's a change in behavior here if momentum holds above 60, because you saw since the peak that we made there last week, you've got multiple stretches into oversold territory, obviously a couple 40 breaks here, 60 hold into the start of the week. And even on this stretch here, first time that you've actually made a stretch into 60 this week. So it looks like we're trying to make a turn. The opening range high isn't too far off. This break right here constitutes a break above the European opening range high. So here's the European open. Right here, 2 o'clock, European opening range low, just right around 89.75, got that stretch into 89.65, whatever. Opening range high is 90.30, 90.28. This move right here invalidates the European opening range and does give you a topside bias as you head into the U.S. session right now. The topside targets on the longs here, the only thing I would bring your attention to is this trend line off of the highs. Okay, and that comes in just ahead of the weekly opening range. And if this gives out, this region right here, I'd be right back on the long side looking for a check back into 92, 92.50. This is the region in focus right now. Snug that up right in the corner there. And Tuttle, a break of this region, right, puts you on the long side heading into the end of the week, looking for 190, 190 first, which is the stretch high you made there on Wednesday. And then obviously the key region that we've highlighted on the daily chart, you know, that cannot be ignored. You have the close high for the year there. The high day close comes just ahead of that. The high day close comes at 191.50. So keep these levels in mind, guys. But at the end of the day, Tuttle, this is just for your consideration, man. You're right slap in the middle of the weekly range, right slap in the middle of the monthly range. From a scalping standpoint, I like to be towards one of the end of the extremes. That being said, those are the near-term targets I'd be watching for here for sterling CAD. But this does constitute a break of the European opening range at this point. Does that make sense, Tuttle? He says if we get a break and retest of the descending trend line, would the stop be too far away? A break and a retest of the descending trend line. It depends when it happens. Okay, Tuttle, depends when it happens. If you can't, listen, when you're going on the intraday trades, guys, if you can't put your stop against the session low or at least a major swing high, meaning a swing high that tags a resistance, a swing high that tags a key fib, a swing high that tags a moving average, a swing high that tags a pivot. If you can't choose either a session high or low or a major swing high or low, then you can't take that scalp. At the end of the day, risk to reward is everything, right? So if I can't comfortably put a 60 pip stop that puts me in a region against a high or a low, it's not a play for me. Does that make sense, Tuttle? He says yes. All right, cool. Again, an example of how that would work out. Just want to entertain your idea there. If you get a break of this, right, you're saying, and you get the pullback. If that pullback is maybe an early Asia Pac, and then the early Asia Pac opening range sets up, that breaks to the upside, sure, stop against that would be perfect, Tuttle. That's why I put a disclaimer there. It depends on where you are in time, right? So if we're just setting up the Asia opening range or if we're just setting up the European opening range, then that breaks. That becomes a new low that I'm essentially pushing off of. So absolutely a possibility on this trade if we get through this region. But right now the focus is the weekly opening range. Your Monday, Tuesday stretch is pretty clean. Cool? He says that is really helpful. Right on, Tuttle. Cheers, mate. Not bad. Sterling CAD, Sterling Yen, both pairs back on the menu, I guess. Not bad. Okay, Gert had a question here. He says, hi, Mike. Kiwi Yen, please. 30-minute divergence, waiting for the break of the trend line to look for a short entry. Your thoughts, please. Kiwi Yen. Well, right off the bat, I just want to say I'm not too crazy about getting long the yen right now, right? Because dollar yen looks like it's breaking and invalidating that longer term formation, right? So, Gert, just an objective look at the markets, you want to take a step back and just kind of keep that in reference in mind. In fact, take you a quick look here. Just take a quick look here at the performance gauge so far in the session. So this is live performance just so far today against the dollar. The yen is actually the weakest of the lot. Do you know what I'm saying? So, Gert, I'm a little cautious about trying to go long the yen when it's the weakest performer on the session. That's not to say that Kiwi yen won't pan out. We are at resistance, and I'll go over this with you in a moment. But that's just something I'll always keep in mind. Am I trying to fight the strongest trend of the day? And I feel like going, long the yen would essentially be trying to do just that. And I know it's versus the Kiwi, so let's entertain that idea for a minute. Let's just see what relative performance versus the Kiwi is. And again, if we take a quick look at the relative performance of all the major counterparts versus just the Kiwi, guess what? You're still fighting the strongest trend of the day. Right? Well, maybe not the strongest. This one's got a 0.43%, but pretty darn close. So I always like to start the session by just taking a look at that. Whenever I'm looking at a trade, am I trying to fight is it a trade that's at a major key level? Cool. Am I fighting the momentum of the day? I think we might be trying to do that. That being said, just as a caveat there, that being said, here's what we're looking at with the Kiwi yen. Huge region of resistance. You're absolutely right. It would need something a little bit more convincing because actually this break today pushed through the opening range slightly. So we can't really validate it as a break just yet for the week because here's the Monday candle. So you're just trading above that. But major key resistance. you have the, I think I just deleted something. You have the 200-day moving average. I think it was an extension I just deleted. Oh, it was that median line. I'm sorry, guys. I knew there was something missing here. There it is. Okay. So huge median line. This is off the highs from last year. 1 tag, 2 tag, false break, 3 tags, consolidation, break, fall, resistance. So you have the median line off the highs from last year. You have a 50% retracement from the decline off the highs. Coincides with this 50% off of the ascent. Not really going to stress that so much. And they all coincide right in this region, just below 86, 88.65 or so. So I would be looking for a high here. Am I just going to take it because price is at resistance? No. Gert. So I need something to turn over. I need something to switch my bias, because right now we've just been on this stretch, and you just broke resistance. Essentially yesterday you proved the resistance break that we were testing on Friday. So let's look what this looks like on the near term Kiwi yen. I think we had the scalp set up a few weeks. Should still be pretty clean. That's dollar yen. And this is last week's high. All right, I'm sorry, this is 2 weeks ago. Nice swing high there. And divergence into the high. So you do have something here cautionary. You know what? I think you might get a decent play at it. Gert, this is how I would look at it, man. And again, let me just entertain this idea real quick. Oof, 618 right there. Okay. So here's what's going on. Pretty big level, right around 88.30, right around where we are right now. You have divergence into the highs. I don't have a trigger break. We can bring this into a 5-minute to see if we can identify some sort of near-term trigger in momentum. That would be the operative trigger that I'd have to be working with, a low in price. And your stop would be against the highs. So you're looking at a 25 pip stop right now, depending on when that trigger gives out. It could be a play. It could be a play. Again, I'd just be cautious about trying to fight the strongest trend of the day. Gert, that's my only problem with it. That's my only problem with it. It does look like it's getting tired though, and from a momentum profile standpoint, I'm just waiting for either a 50 break, this trigger break. You already got the divergence. What do I say to you guys all the time? A divergence into a trigger break 9 times out of 10. I will take a position like that. So I don't think it's primed just yet, at least as far as the signal to take the position is concerned. From a price point, Gert, you're absolutely right. We are at resistance. I'm not going to count that as an opening range break for the week. So I really need to see a push with some assertion here through 88.30, and that's what would invalidate the bearish idea. That being said, I'd be hunting for short triggers while in this region. Listen, at the end of the day, if it gives out, you're probably going to see a pretty strong run right into the 90 handle. 88.90 would be the first target. But I'd wait for some sort of resolution to that near-term consolidation we're seeing. Does that make sense, Gert? He's saying, cheers, Mike. You need to keep an eye on the strong, weak pairs for this session. It's always a help. It's always a help just to kind of take a quick gander. As soon as you walk in, take a step back, look at the markets and see what are the biggest movers, what are the biggest or the strongest pushers of the day. Not really my style to try to fight that. That being said, I think this will be primed very soon. Let me see what the Kiwi dollar is doing now that I'm interested all in the Kiwi. Yeah, so the Kiwi dollar sitting real tight in that range. It's now the opening range for the week as well. The same range that we talked about the close of trade last week. 79.70, 79.50 into the 73.40 level has been the market for Kiwi since the 4th, pretty much since mid last week. And it also represents the weekly opening range now, okay? Keep in mind, Kiwi dollar right above has a slew of resistance levels it would need to clear before we can even think about getting a more constructive approach here. Obviously, you have the monthly pivot, not really huge on that, but you have the 2012 low. This is the opening range high for the month. You have the same slope of the descent here. Okay, that region is right there as well at this point. And if you take a basic retracement right off the highs, whoops, just to show you, it's a basic 38.2 retracement too. Okay, so on all accounts, Kiwi dollar is sitting just below key resistance level. So if we see Kiwi yen turn around, what does that tell you? You either need to see some real strong moves to the downside in Kiwi dollar, or you need to see some of that yen weakness that we're seeing today pared back, Gert. And it just doesn't look like we're going to see that, especially if dollar yen holds above that formation. So an interesting trade idea for sure. But we'll have to see if we get that signal to the downside near term. Not a bad setup. Some interesting movements here, guys, in crude too. If you woke up this morning, you might have been hearing that trade still on the headlines. Interesting setup that we panned out yesterday in the scalp webinar. I just wanted to show you how that's been looking, guys. It was really clean right into the close of yesterday's session last night. I even tweeted this chart. It looked like it broke to the downside, but look at how this stalled right here. So we adjust the trend line here, we adjust the pitch so that that median line hugs the rally. Look what happens. Look what happens. 1 tag, 2 tag, 3 tags, 4 tags, and that keeps us in the formation. So don't be afraid to adjust your analysis as the market continues to move on. Obviously, this thing is still not a constructive momentum signature. You know, this was the first break that we saw. The 40 hold here kept me constructive, but guess what? The opening range for the month is the cleanest out of all the commodities at this point. Here's your February open. Your February low was just above that highlighted region, 47.70. We talked about that early in the year. Right back above it, opening range high, right at a 618 extension from the low, 786 confluence. So you're basically looking at 53, 53.90 is resistance, 47, 47.70 is support. And again, if we take this to the daily chart, I really wouldn't be surprised, guys, if you see a little bit more of a recovery here in crude. That being said, right now, you're at resistance. Could see another test of this trend line. If it breaks, that actually opens up a nice short opportunity right into the opening range low for the month. I'm a little bit more on the side of you inevitably get a pullback here, then a break right through 54 to see a recovery into the 58 region here for crude. Again, just my personal opinion right now, but the opening range for the month is exquisitely clean here. So that's what we'll be focused on for crude. SPX, you might have saw this chart when I first opened the chart, or when I first opened the room. This is still the same resistance range we talked about last week, guys. Nothing's changed. You know, you're essentially looking at 2065 to 2070 as major key resistance for SPX to open up the month. And longs in risk are at, or longs are at risk in the SPUs here just below this region. Interestingly enough, I was looking at this at home. If you look at this trend line, guys, that looks like it could give us a topside signal if this break is accompanied with a move above this region. I don't know. It looked like it was actually spiking through a little bit more earlier today. You'd have to wait for the close. Obviously, RSI is based on the closes for the daily charts here, but key resistance near term in SPUs as well. Okay, So those are sort of the setups that I'll be looking at, guys, as we open up the week here. At least the sterling, at least the euro Oz has been the one that's been at least offering some nice signals. The sterling's still in that opening range. The Aussie dollar setup, that's in play. The dollar yen, I still think you have some nice room there. Let's check and see how those are doing. Okay, watch that median line near term. And euro Oz. Still looking for a move into the opening range high here. Coming close to target, the initial target 77.50 on Aussie. And again, that's the secondary region we'll be looking for if we break the weekly opening range low. One thing I saw a question earlier. I'm not sure who asked it. It was on dollar CAD. I've been getting questions about this every day in the webinars, and it's just still not a play for me, guys. It's still not a play for me. I'll liken this to the question that was asked earlier on sterling CAD, right? As we sit right there in the weekly and monthly opening ranges, this is sort of the epitome of the same exact argument as momentum is testing support. So in fact, on a breakdown type of scenario, if you want to play the dollar shorts, if the index turns around, this is the trigger break you'd be looking for, a move below the 60 range in momentum and a move below the opening range low for the month. From a near-term standpoint for dollar CAD, the scalp is not even in play here. This is what we were looking at to close out last week. Obviously, not the slope the market is working with. So on these consolidation trades, guys, especially on a stretch trade like dollar CAD, it pays to wait. I think you get the break, and you don't trade this as a scalp. I think you play this a little bit more from a swing basis than intraday. All right. So, guys, if there are no other questions, we'll go ahead and wrap it up here. We'll be back online tomorrow morning at 8:30 again to pick things up. Hopefully some of these moves clear the ranges. Look, keep your eyes on the pound. I think, worst comes to worst, the pound could be a non-event until the quarterly inflation report. That's going to be big. That's on Thursday morning. Aussie, keep in mind, tomorrow night, you do get the release of the Aussie employment data, so that's something we'll be watching as well. There is some Japanese data overnight tonight. It's not really a major market mover, so I wouldn't really stress it if you're holding positions in the yen. Interesting, actually, topic also, guys, is the Aussie yen. I was just taking a look at that earlier today. I just wanted to highlight 93. Real nice pivot, last week's high, so it is the monthly opening range high, and the weekly opening range high is just below that. So the play here is a break back below 92, 92.15 here. To give you the near-term bias to the downside, or if we clear that 93 handle to the upside, you look for a tag of trendline resistance, channel resistance, whatever you want to call it, and the retracement from the basic highs here. So that's another one I think that could get a decent play if the yen continues higher versus the dollar, continues higher versus the counterparts. It's going to make it hard for this thing to turn around, just a disclaimer. Something like this would be a much more impressive trade if you saw a broader turn in risk, meaning you saw risk assets turn around, you saw equity markets turn over, commodities turn over, things like that. But certainly an interesting level, just based on the break of this trend line here, could be a test, and if it is a test, you'd look for the move lower. That being said, I haven't taken any positions on this, something to be on the watch list for the next few days. Also, I've been looking at that trigger there. The break, not offering a break in price, so it's not operative. But certainly we'll be seeing if we can get a lift off here. Next thing I'm looking at is sort of that former support trigger. That would be a nice trigger to the upside if we clear the monthly opening range. So a little bit more wait and see. Again, early in the month, you're a little bit lighter on these trades, and then towards the middle of the month, towards deeper in the month is really when we start to press them with a little bit more aggression. We'll keep you updated on the SB Squawk. As always, guys, your feedback is invaluable. I've gotten some great ideas from you guys in the email feedback. So always, info@sbtradedesk.com, guys. Feel free to throw us out comments, suggestions, what you liked, what you don't like, what you'd like to see as we wrap up the beta trial for the service. Your feedback is always going to be invaluable. So best of luck trading. I'll see you guys all bright and early tomorrow morning at 8:30. Cheers.